So you want to start trading. You have absolutely no clue what you're getting yourself into, and that's exactly why you clicked on this video. You want to make sure that you're set and you know exactly what to do and what not to do before you start your trading journey. Or even if you are starting now, these are the tips and I would say secrets that I wish I was taught and I was told before I actually started. This would definitely help a lot. It actually has cost me, thousands of dollars to actually learn these lessons, right? Just from experience and stuff like that. But here are a couple tricks and tips that I'll go over today just to help you when you're just starting trading, or even if you are just starting now, maybe you're in the market already. I'm going to be going over stuff that I wish I was told. So the first one that I want to go over is having a plan. And I'm going to write this all down for you guys so you guys could either take a screenshot, whatever you guys want to do. But the first one is taking a plan. No matter what it is, you're going to have a plan in life. Plan it out, right? Plans make it so much easier and simple to track everything, to make sure that you're on point, to see what you're doing wrong, see what you're doing right. It helps focus on what you should be doing better, what you're already doing better at, stuff like that. So having a plan is crucial. Because if you don't stick to plans when you're trading, it can go very bad. So the first one is having a plan. All right, so having a plan. All right, this is the first biggest one. In order to trade properly, we're going to need a plan. And I did go over making a plan and stuff like that on a couple videos already, but I can go over that right now in a more simple terms. If you guys want to go check that out, you guys can go to my channel and look at that. But having a plan, so this means like a risk management plan. We want to know our risk before we get into the play. A lot of you guys are going to get into the play and expect to make money, right? You need to understand that as traders, you're going to lose money, right? And you need to be prepared for that. You need to have a plan for that every single trade, right? You're not going to be a 100% consistent trader. We got to make a plan. So if we do lose, if this play does go against us, that we have a plan and we're able to actually execute that plan, right? And we're able to minimize that loss. You have to understand when you're just starting trading that you will take a loss, right? It's bound to happen. And you do learn a lot from your losses, which helps you as a trader as well. You don't really learn too much from your winners. You can learn from your winners, but you don't learn a ton compared to your losing plays, right? If we're going to take the break here, we got to be prepared and we got to know our risk before we get into the play, right? Let's say our risk is 10%. You need to be prepared for that downside. If you learn this before you get started trading, you will be so much better off, right? You got to understand your risk and you got to tell yourself that I might lose this play. Am I prepared to lose this play? Do I know my risk getting into this play? Do I know where I'm going to set my stop here? Everything like that, right? If it goes to this price, then I'm out. If it stays above this price, I'm staying in, right? You got to understand that downside before you get in. I would look at the risk before I look at the reward, right? I want to make sure that the risk to reward ratio on this play is not ridiculous, right? For example, if this was down to here, right? Let's say this was down to 50%, right? Let's say our risk was going to be 50% just because that's the trend and everything like that. That right there is that's not going to be a good trade, right? You need to make at least 50% on the play, which, I mean, it's not impossible, but you're trying to hit a home run here when we're trying to look for consistent plays over and over again, right? So we need to understand the risk before we get into the play, understanding that we can take a downside play, right? It can go against us. We need to understand that as traders, that before we get into the play, the first thing you should be looking at is if this goes against us, do we have a plan, right? Do we know exactly what we're going to do if it goes against us? That's the first one, and that's what I mean by having a plan. Now, again, your risk to reward ratio, if you're losing 10% on this play, right? And let's say our max loss, so let's say we're going to lose $200. If this goes against us, we're going to lose $200, right? You need to at least make $200 to the upside, right? If we're risking $200, you should not only make $10 here. You should not only make $20 here. You should be making at least $200, at least, right? I shoot for a 2-to-1 ratio. So if I'm risking $200 and this doesn't mean contract prices or how much money I put into the play, right? I could put $2,000 into the play, right? $2,000 is not my risk. My risk is if I lose on this play, I'm only losing 10% of what I put in. So 10% of $2,000 is going to be $200. That's my risk. My risk is not how much I put into the play. It's what my risk is in the play, right? If I lose 10% of my position, I'll lose $200 of that 2,000. So in order for me to be profitable in the long run, if this goes with us, right, and we actually play the break and we get it right, we need to at least make $200, right? At least. That's a 1-to-1 ratio. That's a 1R. And I did go over this in a previous video, but I'm trying to make it a little bit simpler for you guys. Now, what I usually shoot for is I want to make at least $400 on this play. Now, sometimes, you know, you might only make $200 depending on how profitable the move is. Sometimes you'll make more than that. Maybe you'll make $1,000 on this play or something like that. It's all dependent on price action and what the market is giving you. What you want to shoot for is a 1R. If you're risking $20, right? If you lose on a play, you're going to lose $20, right? You put $200 into the play and your risk is 10% loss and you're losing $20 before you get into the play. You want to at least make $20 to reach this minimum price of the 1R, right? You want to at least reach $20 profit if you're risking $20. There's no, oh, I'm going to make $5 on here. You might be emotional or you might not be getting the right setup. So making sure you have the right setup is also crucial. So with that being said on this, having a plan and risk management. Risk management. I'm going to spell that wrong. The next thing is determining how much money I want to put into the market, right? Actually, I'm going to go over paper trading first because I think paper trading is another big thing. I think everyone should start out with paper trading. And I know that you don't get the emotional aspect with paper trading, but you are executing your plan, right? With paper trading, you learn how to execute your plan. You could have the best levels in the entire world, right? And, you know, that move yielded 400 to 500%, right? But if you don't know how to execute, you're getting out at 5% gains. You're getting out at 10% gains. Or you might not even get into the play because you hesitated or something like that, right? It doesn't matter how good your levels are. It's about how you execute it, right? Are you getting in at a great time? Are you getting out at a great time? Did you hesitate? Did you become emotional where you sold too early? Stuff like that. This is where paper trading comes in a little bit with your plan. Making sure that you understand your risk. Making sure that you're putting, you know, a good position in each play. Not too much, not too less. Making sure that you understand your R multiple, what I just went over before. Understanding your risk before you get into the play. This is all tied to number 1 and 2, right? You need a paper trade so you could practice these, right? Paper trading just goes hand in hand with these, right? You need to execute your plan, right? And this is why you need to paper trade first. People think it's a get rich quick scheme. I promise you, if you paper trade and you actually go over, you know, having a plan and your risk management and you're getting that down, that doesn't mean you're going to be a profitable trader, but that will definitely help you in the beginning. Just going over your plan and making sure you have it right. So that is paper trading. I think that helps a ton. Now, the other thing is being emotional, right? How on earth am I going to control emotions? I'm putting money into the market. Listen, anyone can be emotional putting money into something, right, that you're not confident in. This is why I say practice with a paper account. So you can understand your plan, have it executed right, and making sure you got everything down. Now you got to learn the emotional aspect, right? Now you got to understand what you're doing wrong. I could be talking for hours, and until you start paper trading or, you know, putting real money into the market, you're not going to be able to learn from your losers, and you might be missing on something crucial, right? You might think that it's so easy and stuff like that until you actually start trading, and then you've made a loss, right? And now you lost 50% of the trade, and then you completely ignored your plan, right? Now you know that you're emotional, or now that you know that something went wrong in your plan and now you got to readjust, right? It's all about learning from your mistakes. The more mistakes you make early on, the better it will be later on, right? So again, when you're trading, right, it's better to make the mistakes while you're just starting out when you have a smaller account, because you don't want to make a basic mistake that you didn't learn early on later, right? Why on earth would I want to, for example, let's say I had a flaw on my plan and I didn't learn that until I had $200,000 into a play, and now I just lost 50% of that play. I would rather lose 50% of $100 than 50% of $100,000, right? And this is why you got to learn it early on. So emotions, this just ties into making sure that your plan is solid, making sure that you learn from your losses. If you're getting too emotional, remember, every trader is going to be emotional, especially when they first get started. And it comes through time of being confident and being experienced to actually get rid of those emotions. And again, it just comes with time. You're not going to be unemotional that quick. The next thing is invest, right? Just straight up investing in your education. What you're doing right now is you're investing in your education by sacrificing your time to actually watch this video, right? You could invest by reading a book. You could invest by, going on a paid Discord or something like that. Whatever it is, make sure you guys invest in yourself, whether it's time, whether it's money. Make sure, number one, do your own due diligence. Don't just follow someone blindly. Like, for example, if there's a guy on YouTube named Billy, right? And, he looks like he's doing legit and stuff like that. He looks like whatever he's talking about, whatever he's teaching is legit. And then, you come to find out that it actually just doesn't work at all in real life. It could sound so great, right? All these pattern traders and stuff like that. That could sound so great. In reality, it really doesn't work, right? A blind squirrel can find a nut once in a while, right? It's the same thing, right? You could find gold once in a while if you're in a gold mine, right? It's all about making sure you guys do your own due diligence and making sure you guys know who you guys are following and who not to follow. And some of these Discords and some of these mentorships and some of these courses and stuff like that, half of them are scams, right? Half of them, that's literally how they make their money. They don't really make money trading. You got to be careful and you got to do your own due diligence. I know a few off the top of my head. I really don't want to call out anyone, but just be careful because I do know a few of them. So this is why invest in yourself, invest smart, right? Be smart about it. If you really like someone on YouTube or you really enjoy their content and stuff like that, maybe it's not a bad idea to reach out to them on Instagram and, ask them a couple questions. And if they have some sort of mentorship or something like that, or a Discord or something, go ahead and just check it out, right? Or maybe they'll recommend you a book or something like that. Whatever it is, make sure you guys invest in yourself. Reading a book and stuff like that, watching YouTube videos, everything, right? When I first started, that's all I did was watch YouTube videos and just learn from my mistakes. And I wish there was stuff out there like that I could actually have a mentor and stuff. And I wish I really didn't do it by myself. And I wish I had someone there, that would actually help me to give me, I wouldn't say a shortcut, but they would help me to, beat that learning curve, right? Because it does take a while, but if you have someone there that already has, experience in the market and already is showing success, I wish I was able to follow someone like that. And that's what I'm giving the opportunity for a lot of people out here, especially this is why I made, these YouTube videos, just to give people some insight that I wish I learned when I first got started. The other thing is, don't follow the hype. Listen, there's a lot of, nothing too crazy right now with all the, hype about AMC, GME, stuff like that. Don't follow the hype, right? A lot of people think they're investing or trading, just, investing themselves into GME, AMC, Doge, everything like that. You're not going to be a successful, profitable trader doing that at all. If you follow the hype, you are going to get burnt. You might make money at first, but overall, you ain't going to make a lot of money. You actually can lose money. I know a lot of people that got caught up in that, and now they're down a lot of money. People took out loans and stuff like that, just trying to follow the hype. Listen, there is no shortcut to success. You need to take it step by step. Also, before I go any further with that, listen, if you don't put too much money into the market either when you're just getting started. I have people come to me asking, if I put $10,000 into the market, how much do you think I'm going to make each month? No, you're doing it wrong. I would suggest putting $1,000, right? Put $1,000 and learn from that. you're gonna take an expensive mistake and you're gonna be more emotional with $10,000 versus $1,000. And you really have to learn first with, a small amount of capital before you continue, before you advance. People think, oh, I got $50,000. I'm going to be making like $2,000 a week. Let's go. No. I promise you, the guy that has only $1,000 into the market will outpace that account overall in the long run just by learning, right? It's not about the capital now. It's about what you can do with your capital and all the education and all the discipline you learn when you get started, right? It's not about how much money you have in the market now. It's not about how much money you're going to put into it. It's about what you're going to do educational wise, right? This is just learning, right? Just think of it like a tuition for the market, I would say, right? You put $1,000 into the market, you learn from that. You might blow it a little bit, you might increase it a little bit, but you're learning, right? It's all about learning at first. It's going to take a while. But then once you get the hang of it and once you start to educate yourself and once you start seeing a consistent growth in your account, then you could think about adding on to it, right? You don't just add on to it for no reason. You don't just start out with $10,000. That's ridiculous. So don't follow the hype. This is not a get rich quick scheme. And take it step by step. Honestly, these are probably the 8 things that I wish I knew before I got started. I can go in more depth with some of these, right? I already did with having a plan on risk management. I did go over emotions, but basically I'm just giving you guys a general knowledge of what I wish I knew before I started. So if you guys like this, make sure you guys subscribe, leave a like, comment down below what videos you guys want me to do. This was requested by one of you guys, so I'm going to continue to make videos requested by you. Tomorrow, you guys are going to see my series coming out. So I did what I would do if I started out with $1,000, all about my risk management and stuff like that. So tomorrow, I'm going to be going over, I think, the 500 account, what I would do with $500. And I'm going to continue that series as long as you guys enjoy that. But other than that, you guys have a good rest of your day, and I'll see you guys in the next video.